Welcome aboard, everyone, to a new session of charting across the board. What is going on across the board? Panicking, the periods of risk of 2025, 2026. Is it here? Is this what we are experiencing? Let's dive into the technicals and see what the charts are telling us, not now, but before. I hope each one of you are doing great, surviving these turbulences across the market, with S&P 500 now nearly 10% correction. I believe slightly close to those levels. Bitcoin slightly bounce from 76,000 region, as well as the Nasdaq and the Dow also printing significant lows yesterday. How long will this correction last? Starting with time analysis, we have March 16th on BTC, potentially for an intermediate cycle bottom, at least within the short-term trend after experiencing these major turbulences, right? Extremely turbulences since the highs at 109, now printing 30% correction. Massive decline. Remember, when the sentiment becomes extremely euphoric, we need to approach the market in a different manner, sort of a contrarian point of view. Why? Because when the crowd are extremely hype, you guys know how that ends, and this is another clear example of that manifestation of euphoria, now potentially entering the levels of pessimism, right? Therefore, we're looking at March 16th, okay? At least with the short-term trend. Where are we currently in the price action for Bitcoin? You guys know we're looking for the distribution schematic. Since when? Since January 26. While the public was calling for higher levels, we were approaching the markets objectively, identifying this distribution schematic, right? The variables were there clearly presented up and up thrust after distribution, and since then, if I click here below the new bars, the play button from again January 26 to current date, we were pretty much following these levels to the T almost. Okay, now if we compute the harmonic ratios for harmonic patterns, you guys can already observe the formation of an M pattern, a bullish structure potentially in the short-term trend. That should be ideally within the 70K region for the psychological level. Can we go lower? Yes, there are levels around 65,000, 64, and 55. But you guys know we like to approach the market levels by levels. If one level doesn't hold, we then move into the next one. But so far, we haven't yet breached below 70K region, where we now have a pending M formation. We were pretty close yesterday night after the new lows at 76,000 and change. Did we have these levels in mind? Did we know these levels were possible? Absolutely, yes. All of this is presented in our room, marrow6.com. Everything is detailed in that server if you guys like to join us. Therefore, this one was the unfolding event of what was already within the cards also using distribution schematic, right? We're looking lower levels since then. Of course, there was some opposing views, as always. This is what the market is all about. When one buyer interprets something different than a seller, there are conflicting variables. But what we do here is try to approach the market from the research of the legends of the past. In this case, following the footprint of the composite man, as Richard Wyckoff suggested. And indeed, clear manifestation of his own work, respected so far. So these levels on Bitcoin, we were looking at these levels before, okay, and now has manifested for a shark pattern. I don't want to go too much into the details because the name of these patterns may be confusing for some, but keep in mind that there are names for each pattern that we present here in the room, okay? This one was, again, another idea in the same time as the Wyckoff schematic, only another interpretation of the technical information. The X to the A to the B to the C point with the test, the upthrust at these levels. Then the idea was to keep going at least to the 0.886 from the lows of November of 2024, a 64,000 region. That is the first level of support now after printing the highs, the top, at least in the local top, we indeed headed to 76,000 was the first region. The next one, 71. Again, keep in mind, there are other levels to 70 and 65, but we're moving accordingly. And these ones, or these ratios, are the ones to closer proximity to this pattern, okay? That can last up until March 16th. Okay, that's another projection based on time analysis that we normally do in the room over and over. There have been pretty accurate over the years, so therefore we follow the research of the titans of the past. Okay, so now can we still reach those levels? I am personally looking for a cycle low on March 16th, okay? At least an intermediate cycle low of this selling pressure. Where? To 76, 71, all the way to 70,000 region, okay? Once and if we reach those levels, we are going to zoom in to minor time frames, the 4-hour and the hourly, to have more confluences that can strengthen the argument for support levels once and if we reach this 70K region. So far, 76 has been tested pretty much, and we are bouncing off those levels, slightly bounces. You guys know that nothing goes straight down, but we were pretty close by 200 bucks or 150 on the prices on Binance. So therefore, we are respecting the technicals, and I'm glad this is something that we all enjoy. Okay. I don't want to go too much into the detail why March 16th is a new level or a potential cycle low. That can be an intermediate cycle low, meaning at least some bounce at those levels before heading lower, where the major cycle low across the equities market can be perceived for June of this year. Okay, I believe the Dow has a reading around May. The Nasdaq and the S&P 500 are printing readings for June. Okay, so there might be bounces in between, but overall cycle low may last until June. It can be pretty turbulent as it has been the entire time. Okay, so here to reach those levels, okay, we go back in time from January 23rd, the projection of those levels. Now we are nearing those levels. Okay, so now let's move very briefly into the S&P 500, okay? Very briefly. Wanted to point out also the same criteria, the same levels that we were looking within the room, okay? All of this, once again, is presented in detail with more analysis within the room. The main projection, of course, we have our primary focus on the daily, and when there is more data points, On minor time frames, they also present potential arguments that can be developing within each segment of the move, okay? In hindsight, of course, it is easier to say, all right, we printed a W formation, first reactive move, the type 1, right? As you guys know, there is always a reactionary move at the completion point of each pattern. In this case, a W formation corresponding to a bearish deep crab pattern, right? The reaction, testing the lows, and now after printing a support level, bouncing back from support, this is from January the 25th, we then have an argument for a type 2, a retest, either at those highs or slightly high before the true reversal occurs. And here is a point that I would like to comment on this pattern for the S&P 500, because many are looking at the chart. It got my attention that many are telling what is going to occur next and always changing their interpretation of the technical information. This is not how technical analysis work. Rather, we need to approach the market from the footprints that is already presenting in the chart prior to adjusting to new information and call new highs each time the markets go lower and lower and lower, right? That's not how this field works, my friend, right? It's not how it works. And why I'm saying this, let's bring the hypothesis previously brought for this analysis on the S&P 500. February the 2nd, 2025. This is a copy paste from a screenshot from a room where I presented the arguments on the S&P suggesting the following. Moving into S&P 500 based on daily time frame within the harmonic framework, as well as Fibonacci time analysis, we can observe the following readings. A larger W formation. To keep the context in mind, the larger W formation is this pattern, okay? W, larger formation on the daily, type 1. Let's keep moving. A larger W formation corresponding to a bearish deep crab pattern with type 1. Remember, type 1 was the first reactive move, creating the decline that is one of the characteristics as reactive moves at the completion point. Before bouncing back, okay? Reactive move, bouncing back, now type 2 return. This is where true reversal occurs within the harmonic framework. Before bouncing back and printing a potential type 2 return still in development. Keep in mind, this approach was brought in February the 2nd, okay? Still in development, and arguably in a scenario as type 2 returns, the second test are known for true reversal point. Meaning that if prices continues to trade lower, there are other variables also, such as the 45-degree angle of that decline, then the higher the chances of breaking the recent lows of 5,800. 5,800 on the S&P, once again, was these lows, okay? 5,800, the higher the chances, I said before, the higher the chances to break the 5,800 that could take the index into the 5,600 and 5,500 region. Okay, where are we today? Right now, today, S&P is trading at 5,600 with a low of 5,540. Okay, if prices do not rise above the previous height, 61.62 and change, we can make a projection for a cycle low expected on March the 26th. Okay, this is a data point on the S&P 500. Each trading instrument has their own data points, data sets, the variables on the time analysis, okay? For a potential intermediate cycle bottom. I will keep updating new developments as more data continues to be printed, okay? So here we are once again looking left market leaf clues. The same projection, only to keep these levels in mind because it is important, in my opinion, to have a defined level before the price action get to these levels. Did we know these levels were possible? You be the judge, my friends. Okay. We go back into that idea, okay, after the reading, that was indeed, again, the idea presented within the room when January 31st, okay? That was a reading from the following reading in February the 2nd. That was the interpretation back then at these highs, right? Based, again, on technical analysis. The proper interpretation, in my opinion, okay? Again, you can be a judge, make your own arguments, but so far, all of our ratings are being respected so far. Not my ratings, but the research of these titans of the past. Potential decline from the highs to where? 5600 region to 5590. Why these levels? Now, you're going to understand a very simple approach, right? That were indeed printed, right? Going back in time, to current levels, we are now here. Suggestion or interpretation, January 31st, to current levels, where are we now? At the same levels previously projected. These levels are now the key technical level from the lows of August 2024 to the highs, okay? We are now testing the key technical level, the golden pocket, in this sense of the move, okay? Let me go back into the current framework. This is for the contract of March. We're now testing the 0.618, okay? From the lows, August 2024, to the highs, the 0.618, key technical level, where as of now, we are observing some support for now, okay? So therefore, what occurred from these levels will be key to defend this line, the line in the sand or support levels before heading to deepest levels of retracement. If the 0.618 is violated, penetrated, as Harold Gardy suggests, then we have a deeper correction to the 0.786 and the 0.886, where we then start computing those harmonic ratios for the M formation. In this case, including the lows, the highs, we have a key information, key reading at the B point within the 0.382 that give us a reading potentially to the 0.886, okay, at 5300. That will be a completion point if there is more turbulences to come. But again, there is a key support levels here. Maybe there is a bounce. If the buyers are defending this level to previous structure resistance within the 5700, 58, we will see, my friends. As I said before, I never have all the answers. I'm also speculating within this trading within this industry, okay, which is an approach from technical analysis. So therefore, if we bounce from here, from these levels, potentially previous structure resistance also presented in the room that Bitcoin was telling us that we were indeed in a Wyckoff distribution where the S&P 500 was also printing a similar reading, similar characteristics, okay, for distribution schematic. The idea for the S&P was presented here at the last point of supply within the 6,000 region prior to this decline. That was indeed within our radar. Therefore, we are now surprised by this decline, as many are apparently trying to find the narrative of what took place in the price action. Okay? I know many members or other members of the public are disagreeing with this, but all I can say is that approach the markets objectively and have your readings accordingly without following many out there blindly without an understanding of how this field works. Okay? So therefore, going back into BTC, we may have a potential cycle low on March 16th. That will be next Sunday when the futures market open. I believe there is also options expiration day the futures contract of March ends on the 21st on the S&P 500, if I'm correct, I'm reading this correctly. Yeah, Friday the 21st. Pretty much will be the week of March 16th. Okay. Everyone, if you want to learn more about our reading, you can always visit us at marble6.com. From there on, click the button, get started, and we'll see you on the Discord. To finalize the stream, the Nasdaq also printing, breaching below as of now the 0.618, meaning there might be some chances to go lower on the S&P, but we will see. So far, we're defending the 0.618. Okay, that is a level that if we bounce from there, we're going to look for an M formation. An M formation is often a bullish structure that can give us a lower risk area. By the way, none of these represent any financial advice, but rather, you guys know, an interpretation of the technical information. If the Nasdaq goes lower, we can then compute the same M formation. This is a key data point of the 0.382, right? For a pending M formation, a bullish BAP pattern at the 0.886 1800. However, we will see what the macro will bring, because on the macro, in my opinion, we are within the periods of risk, my friends. I said this over and over. The macro, the primary trend, we go into the NQ here on futures. The macro looks a little fragile, in my opinion. Okay, I said before, if we look at the macro view, okay, we have our ABCD structure also in the Nasdaq in the same manner that was presented in 2022 for the S&P, now also testing the 200%. Okay, this is also a level on the Nasdaq where we still have divergences, higher highs in the price action, momentum indicators disagreeing the upward traction, lower highs in the RSI, as well as slightly lower high on the MACD. Now potentially focusing on that turning point. Okay, therefore, in my opinion, June should be potentially a level of intermediate cycle low, but we are within critical levels. This is what I said, periods of risk 2025 and 2026, now manifesting on the macro. If we're printing the first negative momentum on the histogram island, this can turn into a decline here on equities, Nasdaq, S&P, and the Dow Jones. But of course, the default will affect crypto. And we may have the chance to 65 and 50s, okay? But we will see. We're moving accordingly, okay? From the highs to the lows, we're approaching the markets objectively. Everyone, thank you for being here. Once again, if you're interested, join us, Discord, join the Discord at marble6.com, and I'll see you on the next one. And remember to trade risk responsibly and to live a life with an attitude of gratitude. I'll see you guys on the next one. Cheers.